Welcome to the Startup to Exit podcast, where we will bring you world-class entrepreneurs and VCs to share their hard-earned success stories and secrets. This podcast has been brought to you by TIE Seattle. TIE is a global nonprofit that focuses on fostering entrepreneurship. TIE Seattle offers a range of programs, including the Go Vertical Startup Creation Weekend, TIE Entrepreneur Institute, and the TIE Seattle Angel Network. We encourage you to become a TIE member so you can gain access to these great programs. To become a member, please visit www.seattle.tie.org.
Hello, everybody. My name is Gauri Shankar. I'm a board member of TIE Seattle, and we are back at our podcast from Startup to Exit. And this is part of our Investment Outlook series. We have a great VC from the Bay Area today. We are very, very happy to talk to her. Before that, let me introduce my co-host, Shirish Natkarni. Shirish is also a fellow board member of TIE Seattle, but also a serial author now. He used to be a serial entrepreneur, but he's a serial author. His second book is out all places where books are sold. And Winner Takes All. It's a book about marketplaces. Shirish, over to you.
Thank you, Gauri. Hello, everyone. My name is Shirish Natkarni. I'm a TIE board member as well. Today, our guest is Suman Natarajan. Suman Natarajan is a principal at B Capital's San Francisco office, where she invests in startups powering the enterprise across domains such as cybersecurity, cloud infrastructure, DevOps, ML, AI, and B2B SaaS. Previously, she was a senior vice president at Citi Ventures and an investor at Intel Capital. So welcome, Suman.
Thanks for having me.
Great. So let's start with a little bit of introductions. If you can tell us a little bit about your firm and your investment thesis.
Yeah. So B Capital is a multi-stage global investment firm. Half the team is based in the US, half the team is based in Asia. And as a firm, we invest in seed to pre-IPO across a number of sectors: enterprise, healthcare, industrial, tech, and climate. I sit on the enterprise growth team. What sets us apart is, in addition to having our own platform team, we have a partnership with BCG, where all of our portfolio companies are able to work with partners at BCG across a number of different project areas and for go-to-market advisory. And in terms of our investment thesis, especially on the enterprise growth side, we're looking for companies that are starting to see signs of product market fit as early as the Series A and B stages, all the way to those companies that are at pre-IPO. And we are, looking to lead in those types of opportunities with check sizes ranging from 10 to 20 on the low end, all the way to 50 million plus, and averaging about 20 to 40 there in the middle. And I'll pause there.
Okay, great. So today our discussion is going to be primarily about 2024, but it'll be interesting to take a look back at last year, at 2023, and understand what was it like from an investment perspective.
Yeah. 23 for us, especially on the growth side, was much slower, especially compared to 22. We saw a lot of companies that still had quite sizable valuations at the early stages, but were still catching up on the growth side to kind of meet a new multiple requirement that we kind of saw as an industry, driven also largely by the interest rates in public markets. And therefore, we were being much more selective. And in fact, we're much less active overall in 23 than we were in the previous year.
Okay. So I assume that since the public markets, went down quite a bit, that valuations were also affected.
Valuations were absolutely effective. So as we saw multiple compression in the public markets, the lower multiples, which is basically a multiple of revenue, which was kind of our kind of determinant for valuation, we saw that drop considerably. Whereas in 22, we could see multiples that were 50, 25 to 50 plus X on NTM, or next 12-month revenue, or ARR. This year or last year we were seeing much lower, 10 to 15 or even lower was kind of the compression. And so you can see as companies, if they didn't hit that revenue mark, the multiples and the valuations consequentially were much lower as a result.
Got it. Okay, over to you, Gauri.
So, Suman, 23 was year of AI, and I'm sure that you guys also focused on AI. Share a little bit about your AI investments you made in 23 and the thesis of your AI investments when you made them last year.
Yeah. We were really slow on deals overall. There was a deal that in the AI infrastructure space that's not been announced, but our thesis was really around looking at kind of proprietary technology. Right now, the foundation model companies have so much momentum and runway, and their models are only getting better. And so we're seeing that opportunity for value creation is a little bit lower. We saw a lot of companies come up that were just wrappers around kind of the main foundation models. And so we were really focused on what was kind of the unique technology or moat that a company could bring to bear that was building AI or enabling or securing around AI. Those were kind of the peripheral and enablement areas that we were really focused on. And those continue to be kind of our core focus areas going forward as well.
So looking at this, given your stage and where the AI requires a lot of capital, right?
Yeah.
At least the current model does, and the lack of or preferred availability of GPU, where do you guys see in the stack to growth stage VCs come to attack in 2024 the investments of AI companies, because they're still rather early. Except a handful, the rest are not quite there yet.
Yeah. We see there are a number of companies that have raised a tremendous amount of capital, and look, 80 to 90% of that is just going to GPUs. It's going straight to NVIDIA's pocketbook. So that's something that we're trying to, be really careful about, because I think what we want to understand is how can these companies build something that is sustainable over time, and what is kind of that ROI for that model. Because in a sense, you are kind of putting forward this huge CapEx, but some of these companies are still like pretty formative in terms of what they're building, and are more so like seed companies in terms of the stage at which their ideas and products have been able to be really tested against the market. So we're really focused on, how are those companies who are building able to still solve problems, and not just focused on kind of the moonshot opportunities. I think there are some investors who are great about making those moonshot bets, but I think we take a little bit more kind of risk-adjusted stance, where we want to understand how is this actually going to help, in the enterprise, drive a huge amount of ROI and enable organizations to accelerate whatever different function they're trying to achieve.
So are there a target number of bets that you will be making in 24? And also, do you want that to be, or do you focus on particular areas of the AI stack?
Yeah. So there aren't a target number that or a quota that we're trying to hit per se. I think we're still looking for the best opportunities that meet our criteria. But we are looking for kind of a few different things. One, companies that are helping enable AI. So in terms of developer tools, infrastructure, API layers, and so forth. And then companies that are helping around protecting data and models as well. So that's on the security side, that's on the privacy side, that's also on the risk and governance side as well. And then there are those companies that are leveraging AI across a number of different use cases. And there we're looking for opportunities, not only in kind of vertical software and horizontal software as well, where AI can be brought to bear in a way that is truly unique and transformative. And how we define that uniqueness is really around proprietary data sets and proprietary data models and models themselves that can give those companies kind of that unfair advantage to stand out amidst the noise that exists. So
awesome. Good. So 2024, from a macro perspective, there's the economy, there's the elections, and then there's the wars. How has that brought into, or how do you think that'll affect VC investments, and because you're a later stage VC yourself, how will that affect your investment thesis?
Yeah. It is, look, I think it gets kind of absorbed into the broader macro market environment. I would say I don't think those are areas that are directly impacting an investment on a case-by-case basis necessarily. So from a thesis standpoint, in terms of the domains that we're focused on, it does not affect much materially. In terms of the broader implications of all of those different events, it's already been creating a ton of volatility in the market overall, which means that we have to be even more careful when scrutinizing opportunities, just to understand if what we're seeing is a spike that is going to actually be durable and enduring, and is not just a result of some kind of temporary micro opportunity that might have been created based on the broader macro. So I think we're still really focused on fundamental drivers. What are enterprises looking for? What are their key priorities? What are their budgets? Where is consolidation in favor versus a best of breed opportunity that might lend itself to a startup opportunity kind of gaining a foothold and growing from there. I think those are still kind of the main drivers. And as those macro trends impact that decision making at the enterprise level, that's how it kind of flows downstream into kind of the investment decisions that we'll make. But we're not necessarily building our theses around necessarily those like around the election or the wars per se.
Got it. So because you are making later stage investments, the enterprise market is still vibrant, although the conversation is all around AI. How has the investment dollars and therefore the pace changed because AI is sucking all the oxygen out of the room? As you said, every dollar raised, probably 80 cents now is going to NVIDIA. So how is that? And you guys make large bets. So it's not like you're making a couple of $1 million bets, right? So that's how do you see specifically enterprise investments in enterprise software change because AI is sucking up so much oxygen from the room?
Well, I think there are a couple of things. One, AI as a category, I think we've seen a flurry of investments. That pace has been slowing, and I don't think it's just because it's the end of the year. I think there is a little bit more scrutiny that the entire industry is putting on all of these AI companies that are coming up, just as we're seeing a crunch across kind of the startup ecosystem broadly speaking. But I think what's happening just as quickly is that, the utility of AI is getting, implemented across all of these different software tools. And so being an AI company is almost the same thing as being a software company at this point. And so that, I think that demarcation is, becoming less and less stark and is kind of blurring around the edges. And so how we actually categorize, I think these kinds of opportunities might slowly kind of converge over time. AI, I think, is going to still remain a very healthy category for investment. That all being said, I don't think it's going away at all. We're still very much focused on it as well. I think we're just trying to be very prudent about what people are actually trying to solve, and if this is a research project versus a product versus a platform versus a business, right? Like, we want to be very careful in what we're thinking about. And quite frankly, there are a lot of companies that predated the AI, the ChatGPT led AI boom, that are now able to incorporate AI and augment their offering considerably as well. And those kinds of companies, especially at the growth stages, can become really interesting as well, because now they have, if they can implement it better than the incumbents that they're looking to immediately displace, then there's a huge kind of opportunity in displacement and kind of grow into that next stage as well.
Great. So a quick final question for you. One prediction that you would make for 2024, and we'll call you back in 2025 and verify it. Now, please make a prediction for 2024.
Yeah. My prediction for 24 is I am pretty optimistic about the market overall. I do think that it's going to remain tough. But I am, my prediction is that we're going to start seeing maybe at the very end, and this is a hope just as much as it's a prediction, a couple of big enterprise IPOs. I know that everyone has been pushing things out to 25, 26. But, I think things can get better sooner. And that is a hope just as much as it is a prediction. And I think that if that is to happen, then I think that bodes well for the broader enterprise market as well.
Great. Suman, thank you very, very much for taking the time and talking to us, and look forward to hearing more from you in 2024, especially AI is part of every software company. I'll remember that line.
Yeah. Absolutely.
Thank you. Thank you very much.
Thanks
Suman.
so much. A great
Thank you, Suman.
conversation.
Thank you.
Yeah.
And Happy New Year.
Yeah, Happy New Year.
Happy New Year. Thank you for listening to our podcast from Startup Exit, brought to you by Seattle. Assisting in production today are Isha Jain and Mini Verma. Please subscribe to our podcast and rate our podcast wherever you listen to them. Hope you enjoyed it.